Yeah, hi, mate. Merry Christmas to you all. Brian sent this in. Must have found this somewhere. I'll forward it on. It's a great review of the year. So it sort of goes through each central bank and what the performance is like, um, and then sort of gives you an overview of the strongest and weakest currencies, and then breaks it down, saying the summary, and this is shows you what happened on that particular day in terms of news. So if we go to something like the Aussie, here we go. A year of up, whoop, sorry, a year of down, then up, then down, 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 and sort of gives you just a point by point as to what's happened. So that's pretty interesting. And then summarizes the GDP and unemployment and GD gives you the trends in GDP and inflation. Very interesting. I appreciate that sharing of that, and I'll send it out to all of you guys. Um, is there anything to take from this into 2015? Well, you can certainly see if you go back to those charts like this. You know, what sort of what influences the market, and at what sort of times. You know, you contain tensions escalate, so you keep an eye out for those sort of things, and you know how to kind of react because you know what the currency will do in those times. Um, so yeah, is there any way to view an opportunity? Well, I'd look at the economic trends. Here we can see the unemployment trends, GDP, and inflationary trends. Inflation is going to be the key one to monitor and keep an eye on those inflationary trends throughout the year, because that'll give you an idea of where the currency, where the flow of funds might go. Yep, very cool. Okay, the only thing I've got on is the Kiwi 4 hour. Missed the opportunity back here because I was travelling off this ring low here, and on that I've got some. I'll have a look at Jersey's stuff later on. But I missed that one and went in on this one, little ring low here, and started to go. Yeah, the stop was underneath that, and we've got to split the order, and I've got two targets on it. Happy to just let that one ride, but that's about all I've got on. We know that the daily is doing what it's supposed to do. Those of you who got the daily, you got two consecutive buy bars. You could this morning have moved your stop to break even, which is just underneath this engulfing buy bar, um, and then let it ride over Christmas. Yeah. But with the stock market, continuing to rally, there's the safe haven bids coming out of the Kiwi. So I have a question here on China, the Chinese currency, and whether or not trading with the peg is valid. Yeah, it certainly is. This one's harder to because it's got a floating peg as a percentage. It's not a set peg like the Euro Swiss has, or even the Hong Kong. But it's a floating peg. So just trying to see what you're doing here is it's a pretty small cycle. It must be cycling along the 20. You've got this support line. Yeah. Okay. RSI overdone. You'd kind of think so. Look, when momentum gets up here, I don't look at the daily because it's unlikely you're going to get a risk reward trade out of it. Yep. Does that make sense? So it's okay to go into that kind of trade, but you'd be looking at it in the um, shorter time frame. So yeah, you got the buying here, but with your momentum already overcooked, you're looking at risking sort of, what's that? 200 pips. Are you going to get 400 out of this? With a double top up here, it's going to be a tight squeeze. But with momentum already this high, is that likely? Possibly not. So if you come down to something like a 4 hour, there's a bit of room left in here. You get this buy bar, this one here. Now you look at about 100 pips and then sort of targeting 200. Yeah. And in that sense, it's you can get it in on the trend, but your risk reward is a bit more satisfactory. Does that make sense? I know you're online there, mate. So you've done the analysis, and that's fair enough. I can understand that. Just a sec. Okay, so you got that. Cool. As to your question about trading something like the Euro Swiss, with the what'd you say, a $2.20.05 bid. We know that the floor is $1.20. So yes, I do think it is a reasonable assumption to be able to buy in this at around $1.20.10. And you know where your stop is. Even if you start to see buying, in around here somewhere, not that there has been, and running a 50 pip stop, you know where your stop's going to be. It's under here, sort of at 19.90. So buying it at $1.20.30, you've got a 40 pip stop, targeting 3 times your risk is 80 pips. Or sorry, 120 pips is a reasonable concept because you've not only got a horizontal line there, but you've got a central bank there supporting the trade. So yes, I do think that's a reasonable concept for a trade idea. Nothing wrong with that. Just as I said, against the Chinese currency, it's a little trickier because it's a floating one. And the Hong Kong has this $7.75 sort of area as its peg. So again, you want to see the buying coming off that like this, slowly creeping higher, and you go, yeah, okay, I can see the sentiment coming into it. And same here, but you have your your stop underneath this level, and target 3 times your risk. That's all good. Don't have a problem with that. Just present it and put it in your arguments. Something a lot similar to like this. Have a comments there saying, this is the reason for my purchasing. Yes, I can see the market getting stronger with higher highs and bullish price action. Got the strong horizontal support level, and you build that for your reasoning for the trade, and identify what the fundamental belief is on the trade, and say, yeah, well, it's off that major support and central banks support. Yep. So this kind of setup is good to see. So I can see the horizontal here. It's nice and clean. $1.45. I can see the Fibonacci where he's drawn it from. That's all good. Also the orange trend line sort of identified some hidden divergence there. I think it's a little tricky to try and identify hidden divergence on the first cycle, and that's what this really is, the first cycle above the EMA. When you get 2 cycles, it makes it easier. So if we come to something like the dollar yen, here's your first cycle. There's your first cycle really. And then you get the second cycle and you've got hidden divergence. You get the third cycle and there's no hidden divergence. but here's your first cycle. So we can see hidden divergence there being much lower momentum, whereas on the first cycle, you're kind of going from this point here and saying, oh yeah, there's hidden divergence. Well, you want to look at the trough, and that's underneath the EMA. So that's, whilst this analysis has identified it, I kind of disagree, because you should be looking at the low one. So hidden divergence, you're not really going to see on that first cycle. You should be looking at it for the second cycle. Other than that, that'd only give you a score out of 7. Still not bad. Getting that buying in there, finally coming into the euro, and looking at taking the entry at 47.16. Okay, stop is at 44.82. Makes it a pretty large stop. So your lot size is quite small, but it's strong support at 45. Fib cluster support. 3 inside, also waiting for another entry on lower time frames. Okay, that's all good. I like that. What's your email say? Not much. Okay. So then we come to the Aussie yen. A gentleman was looking at this Aussie yen, but decided to cancel the trade because he wasn't getting triggered in. Not sure. I think the correct trade should have been going in above this bar here, which you would have then got in on this day here, the high test. I'm a little confused as to why you've gone in above this bar here. Okay. If you've only identified it after this bar here, this bar's formed, you go, well, that's full of selling, then I'd be putting my entry just above the high of that bar. Your stop loss here, unless you're using an ATR, doesn't really make sense to me. Kind of almost like you're just having a 100 pip stop. And I'm not sure what the ATR on the Aussie yen is, but I don't think would it be 100? And so, yeah, I mean, you're in the money, and had you traded, placed the order after this bar, and you would have gone in on Friday, been taken in on Friday, and managing the trade, you decided to cancel the trade after this bar. Well, the fact that you didn't get triggered in, that's your prerogative. But worst case scenario, I would have gone in, because you're a day late. I would have gone in around where price is now, above the high of this bar. And you've got a 100 pip stop. I'm not sure why, but I'll have a look at the ATR. The ATR is, I suppose, on that day was ATR 99. I suppose that's why you've got it. It's around 115 pips around that day. Let's have a look. So on this day, ATR was 115. So if you're looking at ATR, remember it's ATR plus 10%. So if it's, it should be looking at 126 pip stop if you're going to do that. And that's 126 pips from your entry. So that would put this 126 pips from that. You're looking at 96, sort of 50 something, 47. Yeah. Anyway, you decided to cancel trade, so it's kind of a moot point. The other thing, you said you got a strong horizontal support. I'm not sure where you identified that, unless you're looking at that. And that I would accept the argument, but you haven't got it on you. Can't see any line there other than your Fibonacci. So you're saying you got trend line support? No, you don't have trend line support because you just joined the two dots together. Yeah, that's only the second touch. This being the first, and that's the second. You just joined two dots together. Had there been a third one, and I'll try and find an example. So here you could argue, well, I've got two touches and it's reacting to a third. But at this point you can't put it on your checklist. Right, so you can't put it on your checklist at this point. So that would give it a 7. Any resistance in the way? You found none, certainly not to your target anyway. Okay, so I'd like to see the horizontal on there, and also it's only the second trend line. Plus, I think, being a day late, you should have been looking at above this high test bar as your entry point, and you'd be sitting at break even now. So, yep. Okay. Then looking at the euro yen again. Oh no. Oh, euro yen daily. Sorry, I just closed it down. Let me just reopen it. Yeah. This is all good. You've got this 44.96 strong horizontal, trend continuation, trend line support. Don't know if I agree with that one either. You've put these two here, but it hasn't really sort of come anywhere near it. Not that I know the market doesn't always be precise, but because this is only a couple of bars apart, it's not like a proper cycle from cycle to cycle. This is almost just part of the uptrend. So I don't really think that's a strong point to say you got trend line support. Similar issue with your hidden divergence. You're saying, okay, well, I've got hidden divergence. Well, I kind of disagree because it's only the first cycle above the EMA. So don't know if I agree with that. Yeah, otherwise everything else is there and everything else is good. We're finally getting that buying coming in. Yeah. Just going sideways at the moment, but with yen it should continue to weaken. So then, what's that doing now? Not much. Then we come to this one, which you're looking at it on the daily time frame. We've done the analysis on the daily. Again, you're given the trend line support. Again, hidden divergence. Again, I would say no to both. Strong support, very strong. Your Fibonacci, you started from there, that's good. Monthly channel, okay. Which puts it 11 out of 10. Okay. How do you get 11 out of 10? Horizontal, yes. RSI convergence, yes. Bullish price action, yes. Not now though. It's too late now. The trade should have been on. You should have been trading on this bar here. Yep. So above the high of this ring low. So you're 3 or 4 days late. I know why you're doing that is because you're saying, well, yeah, the trade is there. but for the end of day, yeah, you should have been looking at this, and there was bullish price action. You're doing that. You're doing this because you're now looking at the 4 hour, which I'll come to in a second, and I appreciate that. Fib retracement support, yes. Trend line, no. Any resistance in the way, 93, 97, maybe. Hidden divergence, again, I disagree because it's only the first cycle. You've had, a couple of cycles underneath the 50, now you've got the first cycle above it. Bullish chart pattern, first cycle, okay. Don't know if that's a reason that we sort of look at as a term of bullish chart pattern. When we talk about bullish chart patterns, things like head and shoulder patterns, double bottoms, double tops, flags and pennants, they're the sort of chart patterns. First cycle is not a pattern that's kind of really recognized as a bullish concept. It's a good concept, but not a bullish one. Okay, so I wouldn't have given that. So out of 10, I'll take away 3, which leaves you with 8. It's not too bad out of 10. And that's why I was an advocate of everybody taking this on the daily. So then we come to your 4 hour. Now what I wanted to highlight here, mate, is have a look at that bar on your 4 hour chart in eSignal compared to that bar on my 4 hour chart in MetaTrader, or your 4 hour chart in MetaTrader. Okay, that bar on my MetaTrader is this one here, which is a higher high, higher low. Yep. And so the entry should have been above this bar here. As I said, I was traveling when that happened. Otherwise, I would have placed the order. However, I did see another little ring low here and placed it yesterday, or the other day. So my concern here is always defer to your MetaTrader because the bar formation will be very different. Yeah. So higher highs, higher lows. Well, you do. You got your first cycle above the moving average. Yeah, and that's what we're looking at. Your first cycle above the EMA. Okay, so that's good. You should have given that a point. It's a must. You've gone and looked at placing the order, and you should give that a point. Horizontal support is good. Yeah, these lows is what we're looking at here. RSI convergence. What are you identified here? Hidden divergence? No. Okay, this is the first cycle. We had 2 cycles underneath, then we've got the first cycle, so we can't look at hidden divergence in the first cycle. Again, you've got first cycle bullish price action, 11 out of 8. That doesn't make sense. Shouldn't there be 11 out of 11 if you've got 11 points? Not sure why you're giving it out of 8 when you've got 11 points. But you don't have 11 in 11 of 8. You mean you got 8 out of 11? So that way around. 1, 2, 3, 4, 5, 6, 7, 8. Okay. 8 from 11. Well, you don't. That's not 1. That's not 1. It's only first cycle. So that brings it down to 6. Trendline support, yes. Fib retracement. Drawing your fib from that low there. Good. Bullish price action, yes. Okay, so yeah, that's my big concern is that this bar here looks like a doji bar, and then this one is all the way up here, and you're looking at trading. It should have been above this bar, but had you looked at MetaTrader, you go, well, that's a buyer bar. That's what I want to see. It's a higher high, so you should have been going in just above this. You've waited an extra bar, and then you're up here, and you're probably not in it. Yeah, had you been in here, you'd been looking sweet. You would have been in at around 64. Your stop would have been about 60 pips, and right now you're up sort of 40 pips. And you'd probably have your stop at break even just underneath this ring low there. Yeah. Does it make sense? I know you're online there, mate. You understand what the sort of the concepts that I'm trying to get to you. If not, let me know and I'll go over it again. Quite happy to do that. You got that? Okay. So big thing is, you know, always defer to MetaTrader, because it is the real market that you're trading in, whereas eSignal is the cycle's incorrect, I believe. Yeah. So otherwise, you know, your analysis is pretty good, although you should now also understand one cycle is not a reason, although it is that the first cycle should be included in this one here, having a higher highs being the first cycle, which is a must, yes. So you could transfer that to there, and hidden divergence on the first cycle is not effective, so it's also good to consider. And your risk reward, how much are you risking? 0.5% on it. Did you get in? That's the next question. 92.75. Yeah, you would have got in if you left your order in there. 92.75. How you got that figure? I was trading at 92.83 there. And the high of that was 92.60. Don't know how you got that. Anyway, target 94.50. Okay. All right. That's it for the year, guys. I hope you've had an enjoyable year. Hope you got a lot out of it. Still stalking this Aussie Kiwi. Yeah, I appreciate your support and your time, and wish you all um, have a Merry Christmas. What does negative deposit rates? What sort of impact does negative deposit rates have on the Swiss? Well, you can, if you have a look at that Euro Swiss bar, you'll see what the effect was. It's bullish, you know, so it's bullish for this. Well, it's not bullish for the Swiss. It's bullish for this pair. It weakens the currency. Yeah, because why would you hold your money in a Swiss bank if they're going to charge you for the effort? The whole concept of having deposit rates, and it's only for commercial banks. It's not for individuals. But a commercial bank would not keep their money in the Swiss national banking system, because they get charged for the effort. So the concept of the SMB doing that is so that the commercial banks would then use the funds that they want or that they have, instead of putting it in the SMB, they'd use it, and therefore that would stimulate the economy. What the actual effect is, those commercial banks tend to be multinationals, and so they'll have other places where they can park their money. They'll go and park it in countries like Australia, yeah, in Aussie dollars. And so the net effect on that is therefore weakening the currency. It doesn't necessarily stimulate the economy. I think they're a little stupid in going negative interest rates, but hey, they're battling with a whole bunch of shit that we're lucky not to have at this moment in Australia. Yeah, so it certainly weakens the currency, and that's why you see this pair here, the Euro Swiss, start to rally. Yep. Right, are you still going? What do you think of the CAD pair? Do you think it's the potential to rise above the current range in the next few weeks? The CAD pair, like the dollar CAD? Yeah, look, I do think oil will continue. It seemed to have found a bit of support around 52, which might make oil rally a little bit up towards 60, 60, maybe even 70 bucks a barrel. But OPEC have just recently, as yesterday, reiterated they're not cutting production. So that still oversupply of oil is going to have a detrimental effect to the oil price, um, and therefore Canada, in a sense, because Canada is very much based. Their economy is very much affected by the price of oil. So if oil rallies to 70, then you might see the Canadian currency come down here. Unlikely, but possible. And certainly, I would look for it to break through this in recent or in sort of near terms. A bit like the Aussie going to 80, you'd expect this to sort of go to $1.20, which is about the same as what the Aussie is at 80. Does that make sense? When is that going to happen? Don't know. If you're in the CAD, I'd be possibly looking to take profit on it and maybe re-enter on a shorter time frame if it continues to run. But I'm looking for it to sort of get down to this area here where I might be able to, this area down here where I might be able to snag a long trade on it, because I do believe it's still sort of in there somewhere. Off these highs here, I still think it's going higher. Okay. Thank you for all those wishes, Helen, and others. Glad you enjoy this service that we provide, and I'll speak to you on the next one is on the 12th of January, and we can do a little sort of revision of the rules and the setups, and look at what you send me. It's going to be pretty quiet for the next, until maybe I'd say, things really won't start picking up until the second week of January. So maybe around the Monday the 5th or 6th, things might start getting interesting, but literally it'll be more likely the 12th. Doesn't mean there's not opportunities, but yeah. Gonna love you and leave you now. You guys gonna enjoy. Santa's coming. He's on his way. Take care, and I'll speak to you in the new year. For trades, do you think it's best to close them off? No. No. With this one, it's just the CAD looking maybe a little toppy, but I'd certainly probably bring the stop in underneath all these lows here, and let it continue to run. I'm not suggesting that. I'm just saying that it's going to be very quiet, and you'll see all the majors just effectively trade sideways, and the average range is going to shrink right up. But just manage the trades as best you can. Might give you something to do over the Christmas period. Okay, I'll get out what Brian kindly discovered and shared, and the video for this for today, and I shall speak to you in the new year. Okay, guys, take care.